Good morning, everyone. Myself, Omkar, on behalf of Kirin Advisors, it's pleasure to welcome you all to the Beyond the Numbers Value Discovery Summit 2025, powered by Value Educator and co-powered by Kirin Advisors. So, today marks the final day of our three-day summit, featuring a powerful lineup of focus management meetings to conclude the journey on the high note. So, we move on to our third interaction of the day with the Sumeet Industries Limited. From the management team, we have with us Mr. Pratik Jaju, Managing Director of the company. Good morning and welcome, sir.
Good morning.
From Value Educator team, we have with us Miss Angela. With that, now I hand over the floor to Miss Angela. Over to you, Angela.
Before we begin, a quick introduction. Incorporated in 1993, Sumeet Industries Limited is engaged in the manufacturing and export of polyester products. The company produces polyester chips along with a wide range of polyester yarns, including POY, FDY, texturized yarns, and carpet yarn. Its operation caters to both domestic and international textile markets, supplying raw materials used across various fabric and industrial applications. With this, I conclude my company overview, and I would like to hand over to Mr. Pratik Jaju, Managing Director. Over to you, sir.
Thank you very much. Good morning, everyone. Thank you to all our investors, partners, and stakeholders for joining us today. We appreciate your time and continued interest in Sumeet Industries Limited, and we are pleased to engage with you this morning. Sumeet Industries is a Surat-based integrated polyester manufacturer engaged in the production of PET chips, partially oriented yarn, fully drawed yarn, and polyester texturized yarn. With over 3 decades of operating experience, we have built strong manufacturing capabilities and a diversified product portfolio, serving a wide range of applications within the domestic textile industry. In July 2024, the company transitioned to new ownership under the Eagle Group pursuant to the Honorable NCLT order. Now, Eagle Group is a family-run with dating back to 1981, with 3 generations actively involved in management. The promoters bring more than 30 years of technical and operational experience in the textile industry, strengthening our execution capabilities, governance, and long-term strategic directions. We operate a technologically advanced manufacturing facility supported by international standard quality systems and in-house R&D, enabling us to develop differentiated and value-added yarn solutions. As part of our growth roadmap, the board has approved phase 1 of our polyester yarn capacity expansion, which involves an addition of 15,000 tons per annum with an investment of 30 crores. This expansion is aimed at strengthening our presence in value-added synthetic yarns while supporting scale, operating efficiency, and profitability. Now, energy efficiency and sustainability remains key focus area for us. Alongside our already commissioned 14 megawatt solar power capacity, we have taken steps to secure long-term renewable power through participation in a captive wind energy project. Under this arrangement, we expect to access around 4.2 megawatt of wind power, which should help improve power cost efficiency, ensure reliable green energy supply, and further support our ESG objectives. On the product side, we are sharpening our focus on higher value offerings. This includes the development of value-added yarns, introduction of bright and dope brand variants, and widening our product range to meet evolving requirements across the domestic textile value chain. Looking ahead, our priorities are clear. We aim to execute our strategic initiatives with discipline, deepen our presence in higher margin product segments, and maintain strong cost control. With a more stable ownership structure, a standardized manufacturing base, and a clear growth roadmap, we believe we are well positioned for the next phase of our scale and consistency. Thank you.
Great, thank you, sir. So, participants, now the floor is open for Q&A sessions. Kindly raise your hands or even drop your questions in the chat box. So, we have two questions. So, we have two questions in the chat box. So the first question is, as expansion comes online, how much additional renewable capacity will be required to prevent energy cost from creeping back up?
The expansion of solar and wind power, we have taken into consideration the expansion which is coming. So in Gujarat, you can take up to 50% of the contracted energy from renewable power sources, and we are doing the same.
Okay, thank you, sir. So we have next question from Mr. Parth, that how price sensitive are your value added yarns customers compared to the commodity yarn buyers?
So good thing about value-added yarns are they are not that price sensitive as compared to commodity yarn buyers. In price sensitive yarns, the customer doesn't variate up to say 5% or 10% prices because they are more dedicated to the quality and because their finished products are much higher priced, much price sensitive.
Yes, Mr. Murli, you can go ahead and ask your question.
Yeah. Pratik ji, I just have a single question. That's if you look at the financials, right, from 2022 almost 2024, um, even operating profit was negative, right? So what made the company to make even the OP positive from 2024 to 2025?
So, as you are well aware that the company was under NCLT and the bank was running the company. So the bankers' motive was only to run the company that is in running condition so that they are able to sell it properly. Now, once we took over, we have made many changes. We focused on efficiency, we focused on quality, even the credibility in the market because the buyers were not sure till when the company will run under bank. So the good customers were not ready to take material. Once we came aboard, their confidence built up. We introduced new customers as we are also from textile industry. Then drastic cost, we targeted drastic cost reduction by focusing on the better purchases and focusing on better product range, then reducing cost by introducing by upgradation of our air compressors, machineries, and the solar plants and everything. And this led to new development of products, and this led to our margins.
And even we have just the other income also increased in the last year. That is how?
No, the other income is the exceptional item. The exceptional item is what after we took over from NCLT, we took over at a price. So that is the amount we pay to the bank and to all the remaining creditors. And suppose we have the creditors which were not being paid due to the by the old management, and after the NCLT order, it had to be written off. So those items are called the exceptional items.
Okay, thank you. That's all.
Okay, thank you, Mr. Murli. So we have a couple of questions in the chat box. First one is from Mr. Divya. That in scenario where demand growth slows, how flexible is the capacity in the terms of product switching?
So by introducing new product range and by introducing new product range, a variety of products, we are focusing on that only. That if the demand growth slows, then we are flexible to shift our capacities to different variety of products and sustain the minimum production capacity needed to maintain the profits.
Okay, thank you, sir. Mr. Divya has another question, that with 90% sales concentrated in Surat, what is the key competitive moat versus peers operating in the same ecosystem?
So our 90% sales are concentrated in Surat because the customers, 90% of the India's textile B2B customers are located in Surat. And that's why we are able to sell it easily in Surat. But we are focusing on outside markets as well, which we were not doing before. We are supplying material to South India as well. Now, as I told in the last meetings, that we are focusing on exports as well. So we will be starting exports soon.
Okay, thank you, sir. Which is another question that FY26 Energy's cost reduction guidance is 25% plus. So what level of saving is already locked in versus dependent on operational ramp?
Dependent on operational RAM. We have already acquired approximately 20% of our total power requirements from energy. We have reduced our energy cost by 20% through renewable energies. And after completion of the windmill and the second solar phase, we'll be able to achieve energy reduction of 25 to 30% overall energy cost.
Okay, thank you, sir. Uh, so we have next question from Mr. Vinod that can you share some product-wise revenue contribution in H1 sales?
So our revenue from H1 sales, as we have achieved only 30% value-added yarns till now. But the 30% of value-added yarns have contributed to more than 50% of our revenue in the H1. And the rest 50% is from the commodity products. And we are targeting to reach our value-added products to 50% in the coming couple of quarters.
Okay, thank you, sir. So we have next question is exports are planned for next year. So focus on textured yarns. What is the marginal difference versus domestic sales?
Yes, we are focused on textured yarn in exports, and the marginal difference will be approximately, currently it is approximately 10%.
Okay, thank you, sir. So Miss Divya has another question that as you move past the turnaround phase, what are the 2 to 3 negotiable metrics management will prioritize to avoid margin dilution?
The 2 to 3 non-negotiable metrics. See, first of all, to prioritize our margins, we are focusing more on value-added yarns, which will give us more yield in the downstream. And that is our major focus to reduce our energy power cost, which is one of our main raw material cost, to negotiate better for our raw material prices from our suppliers, and to focus on value-added yarns, which give us more margins.
Okay, thank you, sir. So Mr. Vinod has another question. What is the existing plant capacity utilization?
It is approximately 90%.
Okay, and could you also tell us more about Eagle Group and other groups entities within the Eagle Group, and what are the turnover of this and where they operate?
So Eagle Group has many sub-companies, and Eagle Group is also part of the textile chain. And we have from spinning unit to fabric unit. We are making yarns. Then we have sizing units, we have texturizing units, we have weaving units. So we are into complete change of textile products. And yes, Eagle Group is also operating in Surat only. We have plants in Surat as well as Silvassa. It is the head office is located in Surat, and we have a turnover of around 1,000 crores, the total of Eagle Group.
Okay, thank you, sir. And Mr. was asking that what are the top two strategic priorities the Eagle Group has set for Sumit Industries for the next 12 to 18 months?
So our top priority is, as we mentioned, to increase our capacity, to increase our value-added yarns, to maintain and increase our bottom line, the margins. We are constantly in the process of upgradation as well as expansion in Sumeet Industries. In all phases, to reduce power cost, we are going with renewable energy, increasing our production to cater diversified products, as well as to use our manpower optimally.
Okay, thank you, sir. So, Mr. Murli has another question. How are you planning to overcome the challenges and threats mentioned in our SWOT analysis?
How are you planning to overcome the challenges and threats? See, the major challenge is the competition from international market as well as domestic market, and that, as I told you, we are catering to diversified products and value-added products, and we are overcoming that threat and the challenge. And see, we are reducing the power cost by doing renewable energy, and we are introducing many new products in the next 1 year, which will help us sustain and give us an edge over the market.
Okay, thank you, sir. So we have next question is that the 14 megawatt solar power is expected to deliver 10 to 12 crores net saving annually. So what is the payback period on this investment?
4 to 5 years.
Okay. And if the Mr. Sumit is asking that if imports from China rise beyond stated 20%, so what is your first line of defense, pricing, mix, or customer segmentation?
So mix will be our first line of defense. We are mixing the product ranges so that we are able to produce our capacity. Yes, we will be also be fighting with the pricing as well. Pricing and mix will be our line of defense.
Okay. So Mr. Vinod is asking that what competitive advantage does Sumit Industries have versus larger integrated polyester players, particularly in pricing power, customer stickiness, and product differentiation?
So the competitive advantage we have is we are able to divert our products, our commodity products into value-added products very fast. In larger players, they have to do a lot of changes to do all the segregations. So that is our competitive advantage, which we are already been doing in Eagle for many years, and we have a competitive advantage in the market. The same we are applying it in Sumit by adding value-added yarns.
Okay, thank you, sir. So our next question is a longer term. In long term, what is the realistic floor for energy cost as percentage of the revenue?
Energy cost. See, presently, what energy cost we are being incurred, I can tell you that we will be achieving 50% of our energy units from renewable power. So that will reduce approximately, it will reduce 30 to 35% cost. The energy cost will be reduced to 30 to 35%.
Okay. Okay. So our next question is from Mr. Vinod that how diversified is your customer base today in terms of end use industries and customer concentration? And are there any large anchor customers driving the volumes?
See, presently our customer base is more than 50% is our commodity products, and the rest, as we have introduced value-added yarns recently, we are diversifying into various textile has various industries like apparels, like knitting, like commodity weavings. So we are catering to all the textile customers. Yes, and there are large anchor customers which are driving volumes. Instead of customers, we can say we have good agents who are driving volumes, and these agents, they are giving to n number of customers, which helps our product to enter a variety of customers and variety types of customers.
Okay, thank you, sir. So Mr. Sumit is asking that as expansion comes online, how much additional renewable capacity? I think we had answered
Already
this
answered that.
already. Yeah. Mr. Divya is asking, sir, could you please share your key growth priorities for next 1 to 2 years?
As I've already mentioned, our key growth priorities in the next couple of years or in the next 1 year is to add value-added yarns, to make our 50% capacity to value-added yarns, to reduce our energy cost to by 35% in value terms, and to complete our expansion phase 1 and phase 2.
Okay, thank you, sir. And next question is, what are the major opportunities and challenges you see for the company in the current environment?
See, major challenges is the import from China in commodity products. That is our biggest challenge. So we are countering that by diversifying into various products. And the opportunity is also the same. Due to that, we are able to diversify into value-added products. So I think that in the next 2 quarters, we will have a very diversified product range, which will help us to cater a lot of customers of variety of customers, and overall it will help us to maintain our bottom line as well as the top line.
Okay, thank you, sir. So, Mr. Vinod is asking, where do you see the Sumit Industries in 5 years in the terms of scale, products, positioning, and profitability?
We hope that the Sumeet Industries turnover becomes double in the next 5 years. Product positioning, as we said, we are introducing many new products and expansions are also coming of value-added yarns. So we will be able to cater all types of textile yarns, which we can prepare under our machineries. For example, Catonic yarn, bright yarn, dope dyed yarn, semi-dull yarns, and profitability. Eagle Group has always focused on the profitability rather than the top line. So yes, our profits, as we think that our turnover will double, even our profits will double.
Thank you, sir. And he has another question that could you share your revenue and margin guidance for the current year and the next financial year?
Our revenues for the first half year is around already I'm sorry, just hold on. Yes, sorry. Our revenues have already crossed over 5,000 CR in the first half year. 500 CR. 500 CR. And we are expecting it to maintain in the next couple of quarters. And the margins, we are already having a margin of around 6% EBITDA margin. We are trying to maintain the same for this current year and the next financial year. We are looking at the challenges from China. Even after that, we would like to maintain these figures.
Okay, thank you, sir. So, investors, once again, if you have any further questions, kindly raise your hands or you can drop your questions in the chat box. So, Mr. Vinod is asking that how long does it typically takes for newly introduced value-added yarns to reach meaningful commercial scale?
So once our production starts for value-added yarn, it doesn't take much time. It's a continuous process plant. So once we start manufacturing the value-added yarns, within a couple of days or maximum a week, it will reach to the consumer commercial. It will reach to the consumer for commercial sale.
Okay. Next question, please. So I think we have covered all the majority questions. So if that's so, can we conclude the meeting?
Yes.
Okay. So thank you, participants. Thank you for joining. Thank you, Pratik sir. Thank you, Ms. Angela, for joining us today. So investors, if you have any further questions, kindly reach out to us at corporateaccess@kirinadvisors.com.
On behalf of Educator, I thank the management and all the participants for joining, and thank you for the Kirin team as well. Thank you, everyone.
Thank you.